It seemed it would have been too hawkish if they did a back-to-back hike. But how soon could we see the next one, do you think now?
Well, November is certainly in play. We have the elections coming up next year. And, in Korea, it's all about rising house prices. And there's sort of a sense that if you tighten monetary policy, you get to cool down house prices, make it more affordable. It's not so much an inflation problem, but really it's the sort of worry about escalating house prices that's driving the BOK here.
And I mean, everyone's talking about Squid Game, but I have to talk about it's almost like a Squid Game economy from our Bloomberg economics economists that talked about how the very deep social economic issues that you see when you have youth unemployment that is basically always around those double-digit numbers. So is it more than just rate hikes that can actually alleviate some of these financial imbalances that we see in the economy?
So rate hikes are not going to be a panacea here. There's structural issues that drive up house prices. There's clearly education issues. Families scramble to live in areas where there's better education and elsewhere perceived. There's many issues. Income inequality is playing into this. But I think there is a very urgent need to be seen to be doing something very quickly that's kind of driving this, whether it will help to alleviate house price gains. Maybe at the margin it cools down the market, but probably in itself it's not sufficient.
And Fred, David here, might that potential mistake be hiking rates too quickly? I mean, I guess on the back of that question, another one, how many rate hikes do you actually see then into 2022?
Well, there is a risk of moving too early, too quickly, right? If the global economy is very fragile, export growth will likely slow, and the Korean economy is very dependent on the external side. So tightening into that environment is a bit risky from a cyclical perspective. Now, there's also a limit to how many times the BOK can cut before policy really becomes tightening. We're still sort of in that accommodative phase. You're just removing accommodation by hiking. But we're only about 2-3 hikes away from where policy really starts to, monetary policy starts to weigh down on the economy. So you need to use your ammunition very sparingly here.
Now, since you brought it up, Fred, what is leading to this sort of weakness in external demand? Because you are starting to see not just exports out of Korea, growth at least, we're also seeing that elsewhere across the region.
Well, that's, I think, one of the key stories that's really missed here by many who look at, headline inflation rates going up, energy prices rising. You get the impression that the world economy is on the boil, that you really see runaway demand. But the reality is that actually new export orders are contracting across Asia. We see shipping rates starting to pull lower again. Actually, going into next year, the consumers in the West will shift away from demanding goods to demanding services. And people are not going to buy a second laptop, another flat screen TV, right? And that's going to hurt the Asian export engine. So trade is going to slow, and that's the severe headwinds for economies like Korea.